Las Vegas home values has just shattered the all-time high. Whoa, wait. Are we in the middle of a pandemic? And doesn't Las Vegas have the highest unemployment in the country? Well, that's exactly what happened. What's up, everybody? I'm Adam Hopkins here, and I'm a local real estate agent, and I absolutely love it. I love helping people find that perfect home. And if you're thinking about selling, I have sold more than 100 homes. What I love best is helping people get the absolute most for their home. So if I seem like the right agent for you, I would love the opportunity for applying for the job. In this video, I will go over how Las Vegas, with the highest unemployment in the country, would see an all-time high median home price of $325,000. Now, just to give you a little perspective, before 2020, our all-time high was back in June 2006, in which we reached $317,500. It has taken us nearly 14 years to beat that. Who would have thought, in the middle of a pandemic, facing what potentially is one of the most difficult economic situations since the Great Depression? Now, if you would like to know what government has done to actually make sure we don't hit a depression, and why what we're doing will almost certainly lead to increased values due to inflation, check out this video right here. Now, before I get into all this, I need a little favor from you. Hit that little thumbs up button below, because if you don't, YouTube will not know that this video is worth watching. And be sure to subscribe to the Vegas Report YouTube channel so you don't miss a thing. And hit that little notification too, because if you don't, YouTube will not let you know when we release one of our awesome videos. Well, another month into the Corona crazy of 2020, and the number of homes that we've sold has gone up 31.3% from the previous month. And at the same time, we're not adding enough homes to the market to keep up with demand. We went from 7,269 homes for sale down to 5,917. That is an 18.6% drop in 1 month, leaving us with just 2.2 months of supply. Okay, how many expected that before Corona apocalypse? Post your comments below. I want to hear what you think and what you expected from the market. So with only 2.2 months of supply, we are clearly in a very strong seller's market. Basic law of supply and demand indicates that sellers are going to have multiple offers to choose from. A market is always good for somebody. In this case, it's great if you already own a home, as prices keep climbing, and at the same time, it creates urgency for buyers to get into a home as fast as they possibly can, thus putting even greater strain on an already limited supply of homes. But let's get right into it. First, low inventory. There are multiple factors that explain the low inventory. If you can't pay your mortgage, no problem. You can simply stay put. Because of the COVID-19 relief measures like the CARES Act, losing your job will not mean losing your home. People that might want to sell their homes are delaying, as they don't want people coming into their home during the middle of a pandemic. People that might want to move up to a bigger home, a nicer place, are staying put due to market uncertainty, or they just lost their job. Second would be interest rates. With the Federal Reserve charging zero interest to lending institutions, we are seeing record low interest rates, giving buyers more incentive and more buying power. Heck, before this is all over, we may see negative interest rates from the feds. In today's money, it is $1,000 cheaper a month to own a home than it was in 1990, despite the fact that homes have tripled in appreciation during that time period. The reason for this? Interest rates. Our interest rates then were in the 10s, while today they're in the 3s. Interest rates are really important, so let's make sure you get prime rates on your mortgage. Check out this video here where you can get all the tips you need to give your credit a tune-up. Third, migration. People continue to exodus from high-cost, high-tax states to low-cost states like Nevada. We won't know the full extent of the migration until the release of the 2020 census report. We live in a state where more adult Nevadans were born in California than in Nevada. A recent poll shows that 50% of all California residents would like to move out. Now, despite all the high unemployment, you can expect more people are coming to Vegas. Businesses have realized that people can be productive virtually, and there are cost savings to be had. So think about how appealing Las Vegas will be for that virtual workforce. Whether they're a quick 4-hour drive or a 1-hour flight to attend, say, a mandatory real-world meeting in Los Angeles. It also opens up high-paying virtual jobs for those of us already living here. And lastly, fewer new homes are being built. Home builders have seen a lot of canceled contracts since the beginning of this COVID-19 situation. And they remember 2008 well. So they've been conservative in the number of new home builds. Now, one of the positive side of this, though, is that new builders are focusing on the strongest sector of the housing market, which is the low-cost home. And this is not an area they normally like to focus on as it's not as profitable, but it is reliable. Another concern to monitor: the pandemic may cause some delays and or price increases to building materials, as 30% of all building supplies come from China. Now, there are many other factors that will continue to have an impact on the housing market. Conditions beyond what we've discussed here. I do touch on some of these on this video over here, where I discuss some exciting new projects coming to Las Vegas before I'd even heard the word Corona. Also, check out my video on Summerlin. It's one of our premier communities. You gotta check that out if you're thinking about moving to Vegas. It has some of the highest ranked schools, which we have a video that we're gonna be talking about that, so be looking for that. If you haven't already, please like and subscribe and share with others.